Introducing TiE Singapore Huddle Sessions.
Hi everyone, my name is Sidhi Dhir and I serve as the Executive Director for TiE Singapore. In the face of the current COVID situation, we started this 5 sessions Huddle Series early this month to discuss and share founder and investor perspectives on various topics relevant to the startups. We are on the 4th Huddle and I would like to thank you for showing your immense support week after week. The topic for this week is accessing capital in 2020. We would shed light on the various financial support instruments currently available in the startup ecosystem, discuss the paradigm shift in deploying capital post-COVID-19 from an investor point of view, and many more. Moderating this discussion would be Maya Hari. Maya is the VP and Managing Director, Asia Pacific at Twitter. Maya's focus has been to fuel Twitter strategy and rapid growth in key markets such as China, India, Australia, and Indonesia. She also serves as the president of TiE Singapore. Before I hand it over to Maya, to introduce the speakers and kickstart the discussion, few housekeeping rules. To ask your questions, please use the Q&A button, either located at the bottom or top of your screen. This recording would be shared with all post the session. And lastly, we are all getting accustomed to the new normal of working from home. There is a possibility that there might be connectivity issues or some unwanted background music. So please bear with us if such a thing happens. Maya, over to you.
Thank you, Sidhi. Welcome, everyone. It's great to have all of you here with us today. It's going to be a fun conversation, I promise. Accessing capital. It's been on top of mind for a number of you, as we've seen through the last few weeks. The questions coming in through the TiE community has really reflected the thoughts that are top of mind around just keeping in business, staying in business, keeping cash flow going. And we acknowledge that this year has definitely ended up being different than what we expected when we started. To get us going today in our conversation, we have 2 really special speakers that we thought could shed different perspectives. One from the perspective of the Monetary Authority of Singapore and some of the efforts that government has put out in the current times, and another from a VC perspective, especially someone who knows the region really well, but also has the perspective having been operated in China. So with no further ado, a quick introduction. We have with us Sopnendu Mohanty. Sopnendu, great to have you with us and welcome to the forum. He's the Chief Fintech Officer with the Monetary Authority of Singapore. And what makes Sopnendu a great speaker today, in addition to the role he carries, is he's really well versed over the last 20 years of his leadership in the crossroads between technology, finance, and innovation. So welcome, Sopnendu.
Thank you. Good.
We also have Helen Wong with us. Helen is a partner at Qiming Venture Partners. Qiming, for those of you that don't know, is one of the premier VC funds in China. And Helen is a partner there with a focus on the TMT sector. Helen's quite special. She was rated among the top 100 VCs in China, and
Maya, I think the screen has frozen. We'll just wait for a few minutes. Maya, I think you might have to log in back.
Is the Twitter boss getting tweeted now?
Is top of mind for everybody, given that backdrop as a context. The government has laid out in the past, and specifically the efforts around MAS, keeping this entrepreneur ecosystem in mind.
So Maya, we lost you. So can you just quickly shorten your question?
Sorry. Sorry about that. I'll repeat again. Given that top of mind is staying in business, keeping burn rates low, managing cash flow for a lot of our entrepreneurs. Can you talk a little bit about the relief measures laid out by the government and MAS specifically? What can entrepreneurs look forward to and be able to leverage now?
Thanks, man. I think we all know that there are 3 challenges companies will face in this moment of crisis. First is cash flow challenge. Second will be challenge around getting sales done because they're all locked down. They're all staying where they are staying. The traditional or the usual way of doing sales become constrained. And the third will be the investor confidence itself because they will start holding back their cash. And so there's a period of uncertainty which will just accentuate the challenge they're facing as we speak. So from a policy standpoint, as a market developer, we looked at these three aspects and what can we do to support our startup ecosystem in Singapore and beyond, and see how to elevate at least the temporary shock they're going through. But before we go there, let me share with all your viewers today one of the most exciting thing in my lifetime I would have ever thought would have taken place, but the timing is impeccable. Today we are launching in partnership with the G20 Secretariat and the Bank of International Settlement, a first of a kind, a complete online global hackathon. It just went live half an hour back, which allows any RegTech, SupTech company globally in whatever corner you are sitting can compete to solve the regulators' need for digitalization. Now, this would have been a dream for, at least for the way people think about regulators, to go about in searching for solution. And because of COVID-19, because of the constraint, we created a global platform, completely digital, and the whole process will be soliciting problem, putting a prototype, judging, and deciding the winners will all be done through cloud. Cloud, the word causes a lot of concern, but all are happening as we speak, which clearly shows there's a shift in the way we think about the whole COVID-19 and what's coming in future. And the reason I'm bringing this point is because I spoke about the second one. I just changed the order of response because we have now created alternate path to create sales process go digital. And one of the policy incentive we gave during this COVID-19 package was to create a set of monetary incentive that if you as a startup have a solution for your FIs and you go and solicit that solution and you got a contract, we are going to give you up to 120,000 Singapore dollar as a grant subsidy. So we got three things done here. We got them to go digital through one of our platform called API Exchange, where you have to solicit your client. You are helping the banks to get digitized. And third, I've created an incentive during crisis for you to do that work. So that's one. And coming back to the first point about cash flow, we took specific actions regarding the cash flow because we know there are three things. Either there's a salary payout crisis out there, there's a tech cost, and there's a rental cost. That's what typically startups have to run their shop. We started with a incentive plan where you can get a salary subsidy for your staff if he's a Singaporean or a PR here. We also created a program where if your staff are sitting in home and working and they can get into some online skill update courses, for every 1 hour, I give you $15 of salary subsidy. So again, using this situation, upgrading your skill and still get a salary subsidy will reduce the company's cash burden in paying out salary. And we're still looking at different ways to reduce the salary burden for this period. We're also looking at partner with many of this rental. Of course, now people don't go and work anymore in those rental spaces, but whenever they come back, there's a bit of an arrangement to defray cost out there. And also we have created an incentive for any of the startups who are using tools, BCP tool or business country like Zoom, or you're using some cloud tools to do your work. We're also giving a relief to subsidize those expenses during the crisis. The idea here is to tell the startup, look, whatever you can do to digitize your process, whatever you can do to upgrade your skill set of your staff during this lockdown period or circuit breaker period, we will find a way to support those expenses, and hopefully that relieves some of the burden you are carrying during this crisis. And on the third point, on investors accessing short-term capital for your short-term liquidity need, we have created a program in partnership with AMTD, which is called AMTD ASEAN Solidarity Fund. And this fund allows any startup who will go to the API exchange platform, which MAS and World Bank have built as part of their program to digitize the whole innovation space. If you are part of the platform, you have a client, you can apply for that investment fund for short-term debt, convertible debt, or a short-term equity injection. And that's a $50 million fund which was created exclusively for all ASEAN fintechs in this part of the world. So we have taken this 1, 2, 3 policy actions, but we're also looking closely as the market is getting far more complex because the COVID-19 situation is evolving very fast, and we may have to come back with much more expanded measures if we need to.
Thank you, Sopnendu. Very exciting to see, the crisis become an opportunity for us, and being able to take relief, but also rejigging our own skills as an industry. Thank you for sharing that. Helen, if I could get you to bring in an investor perspective, the question on everybody's mind: has your investment philosophy changed in these times? How do you see the 2020 focus for Qiming? Has it changed? What is the area of focus if it has?
Yeah, sure. First of all, I think there was a little bit of a bandwidth issue just now. So let me just briefly introduce Qiming. So we are a fund based in China. We manage about $5 billion US dollars. We just closed a $1.1 billion fund. In terms of the sectors that we invest in, we do invest in TMT, and we invest in healthcare. And so our investment philosophy has always remained quite consistent. We want to help grow, fast, innovative companies and help take them to the next level. Because Qiming was founded in 2006, and I myself have been in the VC business since the year 2000. So we have gone through various cycles, and we understand that, there will always be ups and downs in the VC industry. But we also see that a lot of very good companies, emerge after these crisis periods. So, for example, I was involved with the Alibaba investment that was after 2003, after the dot-com bubble. We went through the 9/11, and things were very tough. But and Alibaba actually went through SARS, and I still remember at that time we couldn't fly to China to do due diligence, and we had to do it. We had to have the CFO fly and meet us in the US. So things like that. But you do see a lot of great companies emerge. So for Qiming, we're not going to change our investment philosophy. We still, want to keep our steady pace of investment, and we want to look for new, interesting companies that can emerge from this new normal.
Great, thank you. Just talking through this a little bit further. How do you see? One of our viewers had asked a question earlier. How do you see investment trends moving, particularly in specific sectors? You talked about TMT and healthcare. Whether it's healthcare or edutech or medtech, is there anything that you see that will change significantly from the point of view of the investor?
Sure. I would say that there are certain sectors, that are doing very well. We can see that among our portfolio companies. So, for example, we have a lot of healthcare companies, and be it vaccine or vaccine companies, diagnostics companies doing. And then companies doing ventilators, they're all doing very good business these days. And then we also have, on the TMT side, we have companies doing online education, online grocery, e-commerce that have done very well, as well as the entertainment side is doing very well. So in terms of the sectors that we think would be interesting going forward, we would think that, just for TMT side, I think e-commerce is actually going to have accelerated growth in this crisis period and post-COVID as well. And we also see a lot of, in China, a lot of the services industry, they are affected by the COVID, and a lot of the SMEs are moving online. So be it like a small tutoring school, be it like a restaurant that is used to just do in-store dining. They are all trying to move their services online. And on the enterprise side, we also see a lot of SMEs being interested in online tools now, whether it's to help to train their workers, or whether it's to get more sales, online. And we see that a very big move towards a more digitized sales or digitized way of life.
Thank you, Helen. Sopnendu, just taking this slightly more future-looking view of what are lasting impacts of the current crisis, what would be your outlook on the startup ecosystem and the activity in the region post this crisis, whether it's fintech or it's broader than that?
I think the road to digitization will definitely become far more expanded, and it will increase. That's a good news. But during the crisis, I was looking at one of the report from Rosenblatt or something. They are telling that in the near term, there'll be a valuation dip, and the numbers out there for the top 50 fintechs was like $500 billion, but that will see $100 billion going away in coming months. But that's the scary part of the valuation side. But in my mind, there are certain fundamentals which can withstand the crisis. If you have a product which is working, if you have a product which is useful and which supports the digital need of the market, I think you will survive this crisis pretty well. And in fact, you'll come out more stronger and more successful. Now, the other way to look at it is to nuance this into two buckets. One bucket is B2C. If you are a fintech who is a P2P lender, you are a fintech providing financial service directly, you may see a bit of a supply-demand mismatch. Why I say that? Because the investors which are funding a balance sheet to do lending for a P2P lender will see a cash crunch out there. They may hold back, and the demand for such P2P lending would have gone up dramatically during crisis. There's a supply-demand mismatch. So they will go through a period of uncertainty, but if the investors can find a way to the balance sheet to invest in a thoughtful way, they may survive this crisis, may come out very strong. The second bucket, of the B2B buckets, or the fintechs who are helping other institutions to be digitized or to help them to do better financial services, they have two subcategories. A fintech with a product, with a valuable product, will succeed and they'll zoom. A fintech's at early stage with an idea in place and they're still trying to figure out what is the right product, unfortunately, they may find very hard to survive the crisis. So they will be the most vulnerable one. And post-COVID-19, I think post-COVID-19 will see, in my mind, 2 or 3 things coming out very strongly. You will see a much broader collaboration between jurisdictions, whether the national infrastructure, identity, payment systems, the core digital infrastructure getting at least the integration part of this core digital infrastructure will be accelerated. Some of the countries are thinking of almost preponing their desire to build digital infrastructure. They will rapidly expand and bring forward those agendas ahead of time. And so that's a very positive news, because post COVID-19, if you can see this getting accelerated, a lot of the digital infrastructure, national foundational infrastructure will get done faster than the original schedule. That will create a new opportunity for far more integration in the market and hopefully new opportunities. The second one you will see is around a lot of any of this fintech who have multi-geographic focus will be able to take more bigger advantage of this demand of digital need by the sector across geographies. And third, I think will be most interesting to watch is the talent crunch, because even during crisis, post-crisis, the kind of talent who will be required to support the new business model will be in a massive shortage. And countries who have traditionally taken advantage of good talent from other emerging market will find very hard, because their respective market will try to bring back that talent for their own economic recovery. So every country's their own domestic recovery will have a talent pool. So there'll be a lot of global talent crunch, and the countries who are going to succeed are the countries who are going to incentivize global talent better and able to retain them at the respective jurisdiction. So it will be a talent war out there.
I love that perspective of the talent crunch. I mean, it's a natural outfall, but the extent of it, I don't think I had thought through to that extent. Very, very interesting to hear. Helen, to go back to you, I think we've had some questions and interest from the audience to sort of say, what is your, geographic focus within Southeast Asia in the medium term? Has that played out for you so far in terms of your view of Southeast Asia, and where does Singapore lie within that mix for you?
Sure. For us, Southeast Asia, we definitely understand that, it is fragmented, that we have to look at different countries. I think everybody's most excited about Indonesia because it is the largest economy. But at the same time, we're actually working on a deal right now that is a company that is focused on Malaysia and Thailand. So I think we understand that, Indonesia is exciting, but there's also opportunities in other countries. And maybe if you start somewhere where it's not so competitive, you can actually, help to scale your company, help to get your operations up and running in an easier manner, and then tackle the most, big market but challenging market of Indonesia. So, so in general, just to summarize, we like Pan-Asian companies, and if the single country, we would probably prefer if it was an Indonesian company.
Got it. Super clear. Just while we have you talking through sort of countries and geographies, there's a question from the audience live asking about point of view on the most challenged sector so far, which is travel. Obviously majorly hit in the current scenario. What's your outlook on that sector, the recovery, or potentially the innovation that you could see coming out of there?
Yeah, I think long term, I would say that, I still am positive about the travel industry, especially the move to, online travel bookings. I think, and also whether it's like for hotels or for flights, right? I think that OTAs in Southeast Asia, a lot of them, especially in Indonesia, will focus more on flights, but actually there is huge market, especially like in the budget hotel chains, for example. And so we think that trend would continue. But in the short term, due to the travel bans and the virus fears, there will be a huge impact to the travel sector. And if we look at China, we also see that, the sector was badly affected during the lockdown. But, orders for like hotel bookings have already recovered slowly. And I think the last numbers I saw is about 40 to 50%, for April. And I think with the May holidays coming up, we have a 5-day break, you would see that the numbers would continue to improve. So I would think that this is really more of a short-term external shock. Of course, the duration is hard to foresee because a lot depends on the government lockdowns and the travel ban. So, but I think long term, I actually think the small hotel owners will need digital platforms more in the future.
Yeah, I think initially the recovery time was being benchmarked to SARS, but for this sector, I think we're well past that and have to think longer term rather than midterm on this one. Thank you. Sopnendu, going back to you, there's a question from the audience asking specifically on what need gaps do you see for the digitization of banks today? And presumably that's an opportunity for entrepreneurs and services to step up and offer. So can you highlight a few areas there that could help the audience?
Good question. I think most of the FIs we have looked at, the immediate need is the middle office automation, whether it's the risk management or compliance or some kind of credit decisioning, or whether they're using data analytics in middle office for making their business processes work. So that's a big immediate demand for automation, and whoever is playing in that space will tend to get a lot of clients. The second big bucket is the whole architecture of this FIs themselves going through a massive transformation. Anybody who's doing data cleanup, data integration, building APIs for the bank as a software tool, huge demand going to be created in that space. And the third, on the sales side, on the front office side, I don't see much, but there could be some FIs who would like to build any front office bots, interactive tools, which allows them to improve their sales and operation and the support services. So that could be a demand there. So I think if you look at globally, there's a number, it could be dated by now. If you take all the financial institutions at the large one, they spend billions of dollars. I mean, one large bank spends $12 billion annually on tech expenses. Now that money is out there, and that money is going to be spent on rapidly digitizing a lot of services. And it is the small startups and the fintechs who have the agility to quickly deploy something faster as against large tech company. So compete against that, find a way to reach out to these FIs. And again, I don't want a sales pitch, but we have built this platform called API Exchange. Go through the platform, find a way to put your product out there, and hopefully you will get there faster. And again, use all this incentive, you're Singapore based, and get there.
Great, thank you. Question for either of you at this point. Sopnendu, you made a point about the talent crunch becoming intense. We're also seeing, at the end of COVID or during COVID, a lot of remote working becoming the normal mode of working. So do you see that start to play as an opportunity from a remote working perspective, flexible workforce perspective? Do either of you see that as an opportunity to address some of the talent war that we anticipate?
Helen, you go.
Yes, we do see that. Actually, we were assessing a company recently that was providing a video conferencing, kind of like a Zoom, but it was built on the WeChat ecosystem. And it was not just the tool itself, but it also had some like pre-marketing, like QR codes that you can send, to WeChat groups. So to actually help drive the traffic to this video conferencing. So we do see a lot of, companies. In the beginning, they started, their major customers were online education companies, and even some like the knowledge sharing, bloggers. But then it actually moved to a lot of corporates wanting to use the tools to train their employees and try to get information communicated to their employees in a very fast and efficient way. And during the crisis, if you think about, like, for example, restaurant chains, they have employees all over China. This was a very effective way for everybody to be on the same page about what's going on, what's happening, what do they need to do next. So we thought that was a very interesting company and we foresee that there will be more and more such tools that will help people to do this remote work.
I think my response would be very much more straightforward. You think about today, as we speak in Singapore, almost every institution is running their production systems, production processes, businesses with 20% or 10% capacity on site. So if we survive this for next 6 months, I see no reason to go back and have a capacity which has to be sitting on site to do your work. I think there'll be rationalization, dramatic rationalization of resources to be on site to do your work. So that triggers a lot of opportunity to work from home. And that also expands the talent base. If you are if you're a mother with small children, you're super talented, you can actually start working and out of home, and that barrier goes away naturally. So this definitely expands the talent base on top of my talent scare I gave. But definitely it does help a lot. If we survive COVID-19 with 20% and 10% capacity running your institutions, get used to it, expand your talent base.
Yeah, great advice for the group. Helen, there's a very specific healthcare question for you, which is around just trying to understand Qiming's healthcare philosophy and trying to understand particularly whether there's within healthcare specific focuses. Is it preclinical investments or post-clinical investments? Can you comment a little bit about that?
Sure. I'm not looking at healthcare investing, but I do have partners here who are very good healthcare investors. So I would say in general, we look at everything and in healthcare and so from biotech to like so new drugs and to healthcare services. We invested in one of the top dental chains in China. We also have a lot of diagnostic tools, so a lot of medical devices as well. Yeah, we have a few companies that actually went public recently, like Venus Tech, one of the top performing IPOs in the Hong Kong stock market recently. They do these heart valves, and we have company CanSino that does vaccines. That's been also very good IPO. Yeah, we have another one, Sanyo, that just filed, I believe, for IPO. So that does more of medical device. So yeah, so we actually invest in very, very different and interesting companies on the healthcare side.
I have asked for Helen. Can you come to Asia and create a fund for us in crisis? We're looking to see how much we can give you all the companies you need to look at.
Okay, sure. And give me some funds to invest to.
Yeah, sure.
That was the easiest LP pitch ever. You didn't even pitch. You didn't even have to pitch. That's amazing. Very nice. So one other question around just Southeast Asia's ecosystem, and do we actually see this being an interesting time? Will debt funding take off for startups in this ecosystem?
Okay, Helen, you go. You are the expert. I have a policy view, but you go ahead.
Yeah, sure. I think in this time, definitely we encourage our portfolio companies to get venture debt if they, have the ability to get the venture debt. And I think that it would give them more runway, just as a cushion against their current cash position. Obviously, there's some companies that, do not have that ability, and because maybe they cannot pay the interest, and it would just be too much of a burden for them. But if they can, they should try to raise some. Yeah.
I think interesting question, because startups, strangely in COVID-19, are very nervous. So the initial founders' resistance to equity dilution has gone down. I think you'll see. I think you may see a lot of equity pitch by the investors, but the startups will look reverse pitching for debt, and the companies which have got a strong belief and a good state in COVID-19 can negotiate for a debt so that they don't dilute the equity. But anything below Series B, still going through a product development process, is vulnerable to a lot of negotiation. In the weaker side of the negotiation, you will see equity structures being thrown at. But if you are strong, if you are a good product and you are getting more successful, go for debt, don't dilute equity. God bless you. Or have a negotiation in between for a convertible note.
Great. So good advice from both. If you can get debt, go for it. If you can't, you're out of luck, or equity still, the negotiation skills need to be strong. I'm only joking. It's not something to joke about, but it is an interesting opportunity to see. We don't see startups use that much here. Okay, I know we're running up against time. We have 1 minute left. It's been an amazing conversation. It didn't feel like over a half an hour to me. But what is the one thing both of you would leave as a ray of hope for this group to think about as we start to think about coming out of a crisis scenario? What's one piece of advice that you would leave for this group?
I think, the key is survivor, right? And the survival of the fittest. After this crisis, I think you will, likely win the market because your competitors will be gone. I'm not sure there'll be a talent crunch, to be honest. I think that you might actually be in a good position to hire a lot of good talent. In a very, up cycle, it's always hard to find good talent. So on that note, I would say that, you just have to come up stronger post the crisis, and you will be the winner.
My advice would be that continue to survive. I think best way is to optimize your access to government support, and this is more a request, not a advice, that if you're letting go some talent, find a way to get them another job with some of the fintech who afford to take it. In fact, I'm trying to put together something where anybody letting go talent should be able to find the next job. Because as Helen says, that maybe in a strange way, you have talent, you'll have talent available, but post COVID-19, when everybody's ready to pump in money to recover, there'll be a crunch. So use this advantage to pick up talent while being let go, and conserve them if you can for the growth which comes after COVID-19.
Great 2 points to end on. Outlive your competition and hire as many good people while you can afford, and while surviving. So with that, let me hand back to Sidhi. And I know we intentionally keep these short, but thank you so much to our two speakers. You've made this session very, very interesting and informative, and look forward to having you guys back for another conversation in the future. Thank you both. And
thank you.
Thank you.
Thank you, Maya.
Back to you,
Thank
Sidhi.
you, Helen. Thank you, Sopnendu. This was an informative session and a very interesting one, the fastest 35 minutes ever. So keeping to the time track of 35 minutes, it's sad that we have to close this session, but it definitely goes for a round two sooner. Folks, whoever's joined, thank you again. Our last and final huddle in the COVID-19 series would be next Wednesday, 6th of May. The topic for the session would be an international perspective on the post-COVID-19 world. We would hear perspectives on the various trends expected in the tech innovation space in the post-COVID-19 world, and also with significant and fundamental impact to businesses globally, what will be a new normal. So stay tuned. We've invited folks from halfway across the world. Gadi Arya, a professor emeritus in Koller School of Management at Tel Aviv University, to share his perspectives, and a regional thought leader as well. The session would be moderated by Puneet Pushkarna, chairman of Servion, and also sits on the global trustees of TiE Global. So stay tuned and see you next week, Wednesday, 5 p.m. Sopnendu, Helen, and Maya, thank you once again. See you all.
Thank you.
Speak on Wednesday. Bye.